And now let's welcome on stage the co-founder and CEO of Novakid for the talk, Lessons Learned from Scaling to 75 million ARR, which is annual recurring revenue. Here is Maz Azarov. Welcome on stage, Max.
Hello. Добрий день, Podim.
Hello, good to have you.
Likewise.
75 million ARR, huh? That's impressive.
We did pretty well.
I like that very much. So, I mean, first of all, tell us a bit about Novakid, a bit about the background, and more specifically, I mean, maybe you can just give us kind of like an intro for those that don't know what Novakid is and how you came up with the whole issue behind it.
Sure. Basically, Novakid is meant to be the best way for your kid to become fluent in English, and we, see this as a big kind of problem in most of the non-English speaking countries, where in public schools, English taught relatively poorly. It's mostly theory, but not a lot in terms of actual practice or fluency building. So we're essentially trying to build a place where kids can really become confident, citizens of the world, so to speak. This is kind of my dream for my own kids, and I want the same to be available to basically everybody in the world.
And did you have like a pivotal moment where you looked at a school or some schooling system and thought like, no, or just looked at certain metrics and were like, yep, that looks like a niche market, we'll go there?
Yeah, totally. Well, the pivotal moment when I was exploring options for my own kids, for my oldest son, when he was, now he's 14, but back then he was 5, I think, and we're looking, okay, how could he practice English? And there wasn't really any good options. Most of the kind of private language schools, they had essentially like fresh out of the school students who didn't know a thing about teaching kids. In public schools, as I said, mostly it's just theoretical kind of language learning, not so much practical. So, and the moment came in when we saw a company in China called VIP Kid. So in China back then, in 2017, it was a big boom of this online language learning schools for kids, and VIP Kid was basically the dominant company of the day. And it kind of dawned on us on me that why don't we have something similar in Europe or in the rest of the world? Why did China get all this goodness?
Now, that makes sense. The title is Lessons Learned from Scaling to 75 million annual recurring revenue. So what I'd like to do now is, I mean, it's a fascinating story. And for me, I always love these stories, like from zero to the first sales and all of that. But at this point in time, we want to talk about the overarching topic of resilient companies. And obviously, if you have 75 million annual recurring revenue, that's kind of quite good. That's also kind of quite hard. What are one of these pillars that you deem necessary if you look at a company to make this work? Maybe we can break it down to individual, let's call it like lessons or something, if we would.
Sure, I think there's definitely several factors that worked in our favor. One of them was that we're a remote first company.
A remote first?
Yes.
Wow.
So basically we don't really have a central office of any kind. We do have several kind of co-working spaces where some of the Novakiders just choose to be congregating once in a while, but it's all very fluid. So as a result, when some things hit, you can very quickly you can be flexible. Your people can move from place to place. So, for example, I already mentioned that this Russia-Ukraine conflict, we had a lot of people both in Russia and Ukraine, and some of them needed to quickly move somewhere else. And basically, we were very it was much easier for us to accommodate that if we would be offline. So if we would be offline, that would be a lot harder. So that's good. It also allows you to capture the best talent, regardless of where it's located. So to me, it's I don't even understand how can I not be able to hire somebody just because they're not, I don't know, in London or not in Amsterdam. I'm just so used to just hiring the best people wherever they are that to me it's like even crazy to think that this could be a limiting factor.
How do you maintain culture in something like that? Because I mean, remote first is awesome, and then kind of the reality set in, and then more. Because a lot of people say people who work remote, they kind of just look for the best offer, which is like the most, and then then don't stay for culture. How did you?
Yeah, I think I believe it's really kind of it's a myth that there is something wrong with culture in remote-first companies. We just have a different culture. We have a remote-first culture. That's what we have, and we, a lot more efficient in terms of communication because everybody is just kind of one click away. You can talk to them pretty much, not 24/7. We try to be, respectful of people's personal lives too, but pretty much at will. You can connect with anybody you will. We select people for being, let's say, remote friendly, I would say. Obviously, you need to have a lot more self-control. You need to have a lot more, I guess, internal motivation. So we really try to select for more mature people who do not require like babysitting them and stuff.
Quick question, how do you establish that? Are there like red flags you've learned so far, something you look out for, like,
I think to some degree, actually, it's a self-selection. So people who come to us, they usually are a little bit more mature, just in general.
Why is that? I'm just curious.
It just happens. I wish I could know the answer, but I guess people just up front, they understand what they're getting into. And the second part is that a lot of people who actually even make it through the interview process, within initial, I would say 3 to 6 months, it becomes very apparent whether they are compatible with the remote culture or not. Because as I said, we put a lot of responsibility, we put a lot of trust in our employees' hands. And very quickly you see somebody who starts abusing this trust or not delivering on promises and so on and so forth. So it's a combination of kind of self-selection at the entry and kind of quick follow-up after we onboard the person.
I like that. Do you do any regular offsites, all hands offsites, or?
Yes, we do, as a matter of fact. And that's kind of one thing that everybody is looking forward to every year. So we try to every year at least to do one offsite for everybody. And we actually I'm pretty proud that we're quite democratic about that as well, because we allow every team, so basically we give them the budget and we allow them to do whatever they want, right? So they figure out where they want to meet, how they want to meet, what they want to do. And it's pretty exciting to see what they come up with.
Here's the first question from Luca. I like this one. 75 million ARR is impressive, but can you take us back to scaling from 1 to 5? 1 to 5, is it probably million annual recurring revenue, I would assume. How different is Novakid now compared to then? I know about the employees. Would you recognize the old company?
Yeah, I think it's, to me, it doesn't really feel all that different, but because I've been kind of in it for the whole time. But I'm sure that as far as like my own personal role, it definitely has evolved quite a bit. So if initially I would say more of a builder and really just a product manager within Novakid, nowadays I become a lot more, I guess, mentor, maybe culture guardian, maybe kind of strategy suggester. So I'm trying to be less directive and a bit more, I guess, supportive and enabling. So one of the previous speakers, he mentioned about kind of this pole holders, he called them. Yeah, that's pretty much
tent pole. Yeah.
Yeah, tent pole holders. So for me, that's one of the kind of biggest challenges right now is to build the team full of those people, so I don't have to kind of be the bottleneck for the whole company. So the challenges definitely change. The company changes in terms of scale, because right now we're more than 400 people. It's quite a big organization.
That's okay, yeah.
Yeah, if you ask me, that I don't think I can even imagine what it looks like. to have everybody in one place. Yeah, so it didn't feel like it changed, but from the feelings point of view, it didn't seem like it changed. But I understand from like the reasoning point of view, it is quite different.
I'm curious about one thing. I'm curious about a lot of things, but that's you mentioned that your role also changed from basically kind of being a builder, probably being like always on product, always focused on that, making everything kind of work, and then suddenly, bit by bit, kind of giving that out of hand, getting into your new role. On the other hand, that means also others have to start taking care of the product. So tell us a bit about how that happened and how that process also was for you, kind of giving this, I'm assuming, your love child out of hand, having others suddenly do the fun part. Talking product teams.
It felt lonely at times. It's like, nobody needs me anymore. It's like, my God, what am I doing? So it is definitely a change. It is definitely a shift. And it has been a rocky path. We had to go through, so this is going to be, so right now we have basically our third director of product. So
what time frame? Sorry to interrupt.
Probably like 3-4 years.
Mm-hmm. How come the third then? The first two didn't work out?
Exactly, yeah. So basically it's really difficult. I mean, I have never done it before. I never hired a director of product for my company. So for me, this was like completely new experience. What does a good director of product even look like? Obviously I could say, okay, it should look like me, right? But then maybe I was not such a good director of product, right? Because right now the company is much bigger, so you need to actually have a bit more, I guess, like a team experience. And we had to go through some of the hiring mistakes, so that was kind of tough. And as I said, on a personal level, of course, you have to really kind of gain a new identity. I even went to a coaching school. So I spent like 6 months, not a full time, of course, but like part-time learning at coaching school, just to kind of help myself get this new identity. Help myself become comfortable with this new identity, because before that, I was a software engineer, I was product manager, I was building stuff, and now I need to help other people to do it. So it's definitely a change, and psychologically, took some time for me to adapt.
I think it's fascinating you share that. And for me, something I learn a lot about highly successful founders, and I'll give you that stamp straight away, is they are constantly working on themselves as well, and especially also on the mental aspect of that. If you take us back to coaching school, is there like one, I'm assuming there were tons of learnings and tons of things you figured out, but is there like one pivotal moment you had where you're like, man, now I get it?
Well, definitely when people told me, you know what, you're not really listening well.
That's a hard one to hear.
Yeah, this was definitely kind of eye-opening for me, and I really kind of took it to heart, and I worked on this kind of, they say, active listening skills, but it's real. It is skill. You need to develop it. You can develop it, and you should. So yeah, definitely a very good point. This is all the path of entrepreneur is also path of self-improvement and self-change.
I like that, because the thing is, for me, I see it in a lot of entrepreneurs, is you have to constantly evolve with the company you are shaping, and I've seen a lot of them also going out of that. Speaking of the company that's also evolving, now we've talked about 75 million annual recurring revenue. That would mean, I would assume, first of all, you didn't get there probably just by bootstrapping. And I'm assuming at some point in time you had to get on venture capital, get in investors, also obviously having this business model that would go that way. And ultimately, I would assume there's that one moment where you notice you don't need any external funding anymore. I'm assuming with 75 million annual recurring revenue, you're kind of doing okay-ish now. So maybe you can talk us about this, through this transition and what you were aiming for.
Yeah, definitely there were some well, we were similar to Basu, we were one of the businesses that was experienced a tailwind during the COVID. So we actually grew, I think, 700%, give or take.
Wow.
In I think it was 2020, right? And this is what helped us to actually fuel our funding. So altogether, we raised a little bit over $40 million. Right after the COVID, we were able to raise our round A, which was, not easy for us. There were some kind of performance. So the term sheet was not the best. So there were some, questionable things in the term sheet where basically sometimes, like if you hit this number of revenue, then your valuation is this. If you don't hit it, then you actually have to give us extra shares for free.
That's a nice motivation to get.
Yeah, well, usually it's kind of creates a conflict of interest because your investor is basically rooting against you.
Sure, that's brutal.
Right?
Yeah,
it is pretty brutal. But thankfully, we actually hit our targets, we did not have to go through that. And then we were lucky enough to raise our round B just right before the the funding has become an issue, right before the Ukraine events, right before the economic slowdown.
Yeah.
So as we raised this money, we happily started spending it. So we started growing the team, we started hiring like crazy. And I think about maybe 1 year into, after round B, a real slowdown started happening, and we kind of realized, hey, we're going to be really screwed if we don't turn this thing turn this thing around. And this is where really started working on profitability, started really taking to heart the unit economics and what it actually means. Also, another kind of lesson that I learned is that just because something is obvious to me does not mean it's obvious to everybody else within the company. So I actually spent quite a lot of time. So together with my CFO, we spent quite a lot of time just educating everybody within the company what unit economics is, what is contribution margin, why it's important, how to calculate it. But the results were quite amazing. So within about 1 year, we turned to break even, and now we're profitable and cash flow positive. So, as they say, positive buoyancy growth now.
And how does that shift? Because you were just mentioning COVID and Ukraine and so on. I mean, if we think just like in the COVID time, people were throwing money. Basically, you would say, I have a pitch deck. People were like, here's $50 million, do whatever you like. And then suddenly COVID, and suddenly VCs were starting to know, how about profitability and so how did the dynamic within the way you shape the company change? We just talked about positive buoyancy and being cash flow positive. Mm-hmm. From before that, burning money like crazy. How did you shift in that?
Well, we basically, whenever we think about like spending money, we really look for the evidence. We become a lot more data driven. So especially with marketing, because this is usually the biggest expense. So we do a lot of testing, a lot of A/B testing, a lot of uplift testing, especially for brand marketing. That's something we're still kind of trying to figure out. What is the right investment? There's this old saying that I know that I'm wasting half of my marketing money. I just don't know which half. So we're still kind of trying to figure out which half we're wasting. So definitely just counting money, much better at metric tracking. So we have like a weekly operational meeting with my executive team, and we are very metrics driven on this meeting. Be less wasteful with money. Actually, another nice tip is we took from the playbook of Amazon. We stopped using presentations. So basically, the meeting, everybody just reads materials for themselves, and then the whole meeting is we're just discussing. So there is no presentation. It kind of makes sense in retrospective. Like, okay, everybody in the meeting can read. Why do we have this one person reading to everybody else, right?
And kind of the idea is, I think, for Jeff Bezos, that he says also a lot of people are ill-prepared. They come along, they just listen, they float on, and then you read.
Yeah, exactly. And when you read yourself, you actually have to pay attention. You actually have to figure out. So yeah, that's a great hack. If you have too many meetings and they're not efficient, then try skipping the presentation part.
I'm part of one organization, I'm part of it. We do that, and that's super spectacular doing that. So I'd like to switch to some of the Slido questions here, just for the fun of it. Oh yeah, one question I do have, just from a psychological point of view. You're raising money, you're spending money, just smashing at it, and suddenly you notice buoyancy, and suddenly it starts to float by itself. What does it do to you on a mental level?
Well, you actually it makes you just a little bit calmer, I guess, and you are able to think a little bit more long term. And it's amazing. You can start thinking, okay, what are we going to look like 10 years from now? Because
like in really simple language, what does annual recurring revenue mean? Just to kind of let it sink in. It means, oh no, you say it, please. That means that's revenue that you will be getting every year, so to speak, for a certain...
That's basically a projected next 12 months revenue.
And that means basically you'll be fine for that in that period of time.
Well, assuming that your bottom line is also good. So the top line is great, but if you have good margins, good profitability, good unit economics, as I mentioned, then basically what it helps with, that you have money in the bank. When you see a great company, you can just go and buy them. You know that when you have a great opportunity to invest into growth, you can actually go and do it. So that's a great feeling. But not always we have a luxury of that. So I'm very fortunate, Novakid is very fortunate to be in this position now. But especially as a startup founder, this is going to be more of an exception than the rule. In the beginning, you're definitely not going to have that.
No, but and let's be honest, annual recurring revenue or monthly recurring revenue, difficult words, are like the hot thing, like investors love to hear and people on the outside love to hear, because if you have that going for you, it means you have built a healthy company. Now, Luca says, I know I am boring with questions. No, you're not. Very much like these questions. Would you say Novakid is resilient, and why? Why this AI explosion will not sweep you away? Great question.
That's a good question, for sure. So right now at Novakid, we actually feel like this AI explosion is going to enable much better product for Novakid. And of course, we're taking advantage of all the new AI capabilities that have been developed. So we're improving our self-learning for kids, adding more AI tutoring components into that. So I don't know that it's going to sweep us away or not. We believe that most of the parents, at least for the foreseeable future, they will want to have human involvement for their kids. They will want their kids to be practicing their skills with their peers, with like live other kids, not with AIs. So we did some surveys, and surveys do support that. So parents do want their kids to have this kind of live interaction. And we think this will continue. So we see AI as more of an opportunity for us than a threat. Something that will just help us make better product, greater impact for our students, hopefully lower cost for the parents. But that's kind of the way we look at it.
Now, Stepan wants to know how many people from the original crew are still in the core team, and how important was good talent to Novakid from the first 5 million to the 75 million?
Yeah, I can't really tell you the exact count of how many people are still with us, but my guess would be maybe about 1/3. And this is actually one of the kind of biggest heartbreaks when somebody who've been with you like from the very start is just struggling, and you have to part ways. And I had to do it several times at Novakid, and it's not easy. But you just tell yourself, hey, it's actually better for them also to move on, because they're just not in the right place. They're struggling. They're not happy. I'm not happy that they're not happy. So it's kind of. But yeah, maybe 1/3 of original folks stayed with us.
But that's strong, and I mean, you also said how important culture within your organization, and if you have unhappy people on board that are unhappy.
Totally, absolutely, yeah, absolutely.
So that's kind of also the step you have to take and have to do. Maybe last question from my side before I try and summarize this, because you see the time is kind of coming up bit by bit. Is if you were to turn 80, let's say 100, whatever age.
There is a chance of that?
There's a high chance of that, I would think. What's the one thing you will have to have achieved for yourself that you look back and say, yeah, it was okay? What's the thing? What's your North Star you're gunning for all out?
Well, there's several. So one of them is I want to make at least 10 people millionaires.
Mm-hmm. How?
Then,
That's it, 10 people a millionaire?
Yeah.
By what?
It doesn't matter, details are not important.
Okay. But by empowering them to...
Hopefully either by them starting their business or, them selling their options within Novakid or basically directly influencing that. I want to write a book, and I want Novakid to show some measurable evidence that we actually improved the trajectory of the students that were with us. So basically, kind of like a longitudinal study that shows, okay, the kid who went through Novakid has, 75% higher salary throughout his lifetime or something like that. So that would be kind of my dream to come true.
So when's the book coming out?
I'm hoping soon.
I like that. I'd want to read that. Dude, it's been a pleasure. I'll try and summarize that because we can see this big red sign down there. It's always too little time. I'm always enjoying myself so much. So we set out to understand what lessons can we learn in scaling this company to 75 million annual recurring revenue. And we started out somewhere in 2017 in China where you just noticed something and understood that sounds good, but to attract the best talent in the world, you decided, together with your co-founders, to build a remote-first company. But that only would work if you hire people who are full of responsibility and who are trustworthy to make that. Because in order to do that, it's super important. How do you do that? Well, it's a self-selection process, you said. We understood, of course, the only way to do that is not just by growing your own company, but growing yourself. And it was interesting that you pointed out that your coaching sessions were also super important to not just make you a smart product person, but also a very good listener. Being a very good listener helped you elevate that company to the next level, but that also sometimes felt maybe a bit lonely, transitioning to being a mentor and giving that product out of hand, which is, however, really important when you want to build a strong product team. Now, we also understood that fundraising is of the essence and building this company to get to that level that was needed, but it also makes sense to, streamline the process and have the similar targets together with your investors. We understood the first investors may have somewhat bet against you by having these, let's say, interesting targets, but that all worked out perfectly fine. You raised more than 40 million in fundraising, which let you have a company that created a positive buoyancy. And of course, you also talked about that nowadays you're quite keen on to know what you're doing with the spending. I quite like the way you say, we understood marketing is most of the spending, but it makes sense to actually know what's happening with the money, and that you want to know where you're actually spending this. You turned into a very metric-driven company, and you also look at AI as an opportunity, not a threat. And we understood you have 3 North Stars. You're looking forward to creating 10 millionaires, writing a book, and then, of course, seeing true massive impact through Novakid. Did I get that right?
Yeah, that pretty much sums it up.
Dude, it was a pleasure talking to you. Thank you very much. Looking forward to holding that book in hand one day.
Thank you very much.
No pressure.
Thank you, everyone, for your attention.
Maz Azarov. Cheers. Thank you so much.